What's going on, everybody? Welcome to another Nomad Hedge market update video. In today's video, we're going to go through the major indices. We're also going to take a look at the yields, the dollar, and some very interesting things happening in the crypto market. So if this is your first time here, welcome to the channel. Don't forget to subscribe, like the video, and let's get into it. So let's begin by taking a look at the SPX. As you can see here, we hit that resistance line here back in, I think that was on Thursday or Friday. That was Friday actually, last week. So this resistance was actually the former support here a couple of times. This was also the highs here back in August 16 of 2022. So this has been an important area here for the S&P to try to break out. Obviously we failed that level. So the question now is, if you move in a little bit closer, are we going to break the lows here from September 27th, or are we going to make another attempt towards the upside? Now, if you take a look at this structure here based on an Elliott wave count, we can see that this could potentially be, see, this is wave 1, 2, 3, 4, 5. So wave 5 has a target here of 42.20. Okay, so that means that we're going to make another leg down here, break the the former lows here back in September 27th, which was actually the start of the rally attempt for the S&P 500. So, I mean, even if we break below the 42.20, we have to look down towards this 1.618 level at 4100 as well. Now, if we take a look at some of the indicators here, we can see here on the daily chart, which is the one that I've marked here in blue, we almost have a buy signal here on the MACD. However, the impulsive MACD suggests otherwise, that the momentum is still, grinding lower here, and we are seeing the buyers are starting to tick down again. The money flow indicator is flat. Now, we want to see this thing tick up, especially when buyers or when sellers are exhausted. So that's giving us more confirmation that the selling activities have concluded. And it's very important. Now, in my point of view, is that you always want positive divergence here on the RSI to sort of like confirm that the downtrend has ended, right? So what we're seeing here is a lower low, and what we preferably want on the RSI is a higher low. So a lower low and a higher low. That suggests that there is more, positive momentum happening beneath the surface. Okay, so this is not what we're currently seeing here. But if we zoom in a little bit, if we take a look at this thing on an hourly chart, we can see here that the RSI has basically moved down here in line with the price action. But as the S&P has continued downward, we're seeing positive momentum here. Let me just draw a line instead. We're seeing positive momentum here on the RSI. So this could actually be a very early sign on an intraday level that the S&P could have found some footing right at this level. I mean, it would be logical, right? Because we're within this lower low trend line here. But again, we have to consider this to possibly a wave 4 here, and that we could see a minor impulse here towards wave 5. Now, the thing is that if you already have a position, now I do know a lot of people ended up buying here and even here, right? Because they thought that perhaps, okay, we're going to see a breakout here and this is the end of the correction, and they got stuck here, and then the price, started to move down. If you're still stuck here and you haven't sold yet, there's no point in selling and then try to, time the bottom again. On the other hand, if you still haven't piled in any money to this market and you're thinking when to buy, well, I mean, that could still be a good idea to, add some positions, because we have actually corrected a lot here. And I mean, seasonality speaking, September is now over. We're in the first days here in October, and typically the first week and even the second week of October can remain fairly volatile, and the markets can still correct within the first 2 weeks of October. So keep that in mind. I do still think that this is just a good, another good buying opportunity here. But you have to watch this level here at 42.20, because if we break 42.20, then we're gonna look forward to 4100. Okay, so you could perhaps put a stop loss right below this level. I mean, if you're getting stopped out, then you basically have to look at 4100 here for potential support. But either way, we like it higher here. And I do still believe that we have another leg up here towards wave 5, and that means that we're just working out some oversold conditions here. We're correcting this thing. This looks like a wave 4 correction in my view. So let's move on here and take a look at the NDX, which is the Nasdaq 100. We closed up positive here on Monday, and so we didn't break above this lower high trend line. I would have wanted the NDX to break above this lower high trend line to give us more confirmation that that this uptrend is now intact. But you know, we found some sellers here during the session, so we're still stuck with this area here. I mean, I'm looking at this open gap that we could perhaps just be closing this thing and then continue to move downward. But again, one could also take a look at this thing and say, okay, well, perhaps it's a wave 4, and then we're gonna make another low here towards wave 5. We're looking at certain levels here. If we break at the 100% extension of wave C, this is actually the same length here. That's why we're calling it the 100% extension. Then we have to look at this level here, 13,500. It is a possibility, especially if we break this level. That's just something to think about as well. If we take a look at some of the indicators, we're seeing some uptick here in the short-term indicators. The Williams percentage are the stochastics. The RSI is taking up. We're seeing a buy signal here. The money flow indicator is showing positive. This is what I meant with the S&P. We want this thing to spike up here. That's exactly what we're seeing here with the NDX. So the NDX is looking somewhat better here. And if we go back to the S&P 500, because I just realized I forgot to mention this, if we apply some of the moving averages here, you can see that the 200-day, which is this orange line here, it sort of like aligns with this level here at the 100% extension of wave 1. So that when we're talking about 100% extension, we're looking at, we're looking at specifically this area here, that wave 4 is going to correct the same length of wave 1. If we're breaking the 150-day moving average, this was the 150-day moving average, and we're currently at it right now. If we break the 150, then look towards this 200-day moving average. Okay, so this is the next line of support, and worst case scenario, we're looking at this 1.618. All right. On top of that, we also have the Bollinger Bands, right? We are fairly stretched below this 2 standard deviation of the 20 MA. So this would also be a logical area here for the S&P to bounce out of these levels. But again, consider this to be a wave 4, which could highly be the likelihood here, and that we could see another leg down towards wave 5. Going back to the NDX, let's also apply some moving average here. We can see that 200 days fairly, this thing is trading way below the other moving average here. The green line here is the 50-day moving average. Now, what's sometimes also concerning is that you don't want a huge overlap between the moving averages, because then they have to catch up to each other, right? So you want the moving averages not to be far extended or above from each other, because then the correction could be much more severe. Let's also apply the other moving averages here. We can see the 150-day. The S&P is currently sitting at the 150. The NDX is finding resistance at the 100-day moving average. So again, this 150 sort of like also aligns with wave 5, where wave 5 could conclude if this wave 4 is going to be end right here. And I mean, even if we break above this level, we can't ignore the fact that we have the 50-day moving average that could act as a resistance. So there's still some, potential downside for the major indices. And again, the first 2 weeks of October are typically also very corrective in nature. So let's also apply the Bollinger Bands. And, we broke above that 5 EMA, and that's a very bullish sign for now. So we just have to make sure that we're staying above this level. And we want a clear breakout here. And hopefully we are not finding resistance here at the 20 MA. If we do, that's also another sign that we will make another leg down here towards wave 5. So let's move on and also take a look at the Dow Jones Industrial Average. The Dow Jones Industrial Average looks to have already completed wave 3, 4. And since we broke below wave 3 here, it seems that we are still working towards wave 5. Okay, the 100% extension here, which is the same length as this one. So wave 5 could end right at this level here. There's an open gap here, and they sort of like align with each other as well. So preferably we do want to close this open gap. And I mean, it just happens to align with this level as well. So don't be surprised to see this thing continue its downward descent. And we're also below that 100% extension as well of wave A, suggesting that we could even, I mean, that gives us more risk towards the downside actually. So, I mean, if we're breaking below that wave 5, then we have to take a look at this level here at 1.618. Okay, so there's still some downside risk here. Let's take a look at, if this is all the moving averages here. We are below the 200-day moving average. We're below the 50-day moving average. And let's also apply the other moving averages here. We're basically below all key moving averages here. That could also be a sign that we've hit a bottom, right? Because if we apply the Bollinger Bands, I mean, this one is still very stretched up here. You know, if you believe that wave 4 has concluded here, then perhaps we will find some support at this level here. And then we'll just have to see how the market is going to react. I mean, you know, I like to only follow the S&P and the NDX, and then the rest of the market is going to follow through. Let's also take a look at the Russell 2000. Now, the Russell 2000, that would actually be very bad. Or we have an ABC here. So you typically see, let's draw an extension here. Right there. So wave C should have ended right there, actually. But now that we broke below this level, we have to basically look at either this level here or the 1.618. All right. So this sort of like also aligns with the fact that this could be a larger impulse here towards wave 3. And then we're getting into wave 4 and then another wave 5. So the Russell 2000 does not look good by any means. But we are right at that support level. Let's see if we can hide these. Let's bring back the trend lines. We're right at this, you know, this higher low trend line here. It's acted as support 4 times here. And you know the saying, right? The more times we test a trend line, the weaker it gets over time. So if we're breaking below this trend line here, then there's nothing really that's going to save the Russell 2000 towards the down. So that could also, I mean, we took a look at the Dow Jones. We see the Dow Jones having some more downside risks. The Russell 2000 is also looking very bearish here. So it's either the S&P or the Nasdaq showing some more bullish action, or the Russell 2000 and Dow Jones confirming that there's more downside risks in the market, in the major indices. Let's move on here and take a look at the VIX. We saw a spike here on the VIX Monday. So I'm not sure if we left any open gaps towards the upside. Yes, we did. So we're seeing I'm actually recording this on Tuesdays. So the VIX, the volatility, or the hedges, I would say, on the S&P 500, the market is open. So we're seeing a spike here in the VIX, but this could perhaps be because we're just trying to close this open gap here. So it would be interesting to see how the VIX is going to react after this open gap has been closed. There's still this huge open gap here towards the downside. At some point, we have to close this open gap. So that means the VIX has to fall. Let's also move on here and take a look at the dollar index. And so the DXY, if we hide everything here, this is a weekly chart. So the DXY actually retraced 50%, right? So this is typical Dow theory that prices typically retrace about 50% from the highs, measured from the lows as well. So, but what we're seeing now is a complete breakout here. So that suggests that we have 0.618, another level to look out for. And let's apply the other lines here. Let's hide the Elliott waves. So where is the dollar going to take a breather, right? You know, I mean, if we draw a trend line here and draw a parallel towards the upside, I mean, this trend line here could act as resistance, okay? Or we're basically looking at 0.618. So we're looking at a dollar index around 108, 109, and then from there, we'll just have to see how the markets are going to react. So if the Russell and the Dow Jones are showing some very bearish signs here, that means the dollar, you know, could continue its ascent here, and we could look forward towards this 108.7 level. All right. From an Elliott wave perspective, it's really difficult here to measure where wave 5 is going to conclude, because we've already extended 100% over wave 1 here, and we're also above that 0.618 if we measure it from wave 2, 3, 4. And so this is I would say an unusual wave 5 extension. So either we're finding resistance here, if not, we have to take a look at this level here. Okay, so the dollar could still go up here, and so I wouldn't be surprised to see the dollar continue to spike as well with yields so high. That attracts a lot of foreign investors, and obviously that helps to drive up the dollar. So let's take a look at the 10-year here, and we can see here we do have a similar channel here towards the upside. Now if we zoom out, we can see that the 10-year has followed this path here towards the upside. We had a major breakdown here from this higher low trend line here. So one could actually take a look at this and perhaps just say it's probably just a corrective move towards the upside, because if you have a break, what you typically see is just a retest of the trend line before moving lower. Okay, or from an Elliott wave perspective, we're looking at wave 5 to conclude, and that means that wave 5 could either conclude at the 0.618 level. We're looking at levels of 5.6% all the way up to 7%. So that's I know, I mean, if we would see the 10-year move up to 7%, I mean, but don't be surprised. Let's see if we can remove these. I mean, this also sort of like aligns with, I mean, I showed you the Fibonacci levels, but the only resistance the 10-year has now is the former highs here, right? We're looking at this level here and this level here. So, I mean, if we're going to retest this level here and there's nothing in between to stop the 10-year, this is the logical area where the 10-year could find resistance. The dollar is looking like it's moving beyond that, 0.5 level. We're perhaps looking towards that 0.618, and the same thing with the 10-year, right? So these two sort of like moving tandem with each other. Don't be surprised to see the 10-year continue to grind here. But again, either we have concluded wave 5 already, or we're looking towards another leg up here of wave 5. It's a little bit more difficult to wave 10-year yields because they don't actually act as a stock. Yeah, I mean, this is the next line of resistance we have to look out for. Let's also move on and take a look at the crypto markets. Let's see here. This is BTC. We had a major breakout here on, that was October 1st. Right, so I was tweeting about this previously. I was looking at this 100% extension, and I said that this could act as resistance because this could just be a corrective move towards the upside. If this is true on ABC, then perhaps we have to look at this and start to rebrand this thing and say, okay, well, maybe this is a larger impulse, right? And then we're seeing the conclusion here of wave 1, and then we could start the wave 3 process. Now the wave 3, if in fact this is, we need to break above 1.618 to confirm an impulse towards the upside. If we see sellers starts to take control here, well then yes, we could see a sharp decline here towards wave 3. Anyhow, that's just something to think about. We could find some support here, and if we're finding support, then we'll just have to move up here and see how BTC is going to act after $30,500. If we're breaking above this level, then yes, we are in a new bull market, I would say, a new impulse towards the upside. So then we would most likely have concluded wave A here, and or we could have concluded wave A, B, C, right? This could in fact be wave C instead of wave A. Let's also take a look at Ethereum while we're at it. We managed somehow to break above this long-term trend line, right? So this is a trend line that I've highlighted many times before. If you watch my videos, see, this is a test. This was the COVID lows, and we broke below this this trend line here. So that was the bearish case. And then if we move in here to a daily chart, we managed to break above it, but now we found resistance again. So we're below that key trend line again. So the question is if we're going to manage to stay above it. That also should suggest that this could just be a corrective move here, A, B, C, and then seeing another impulse towards the downside. So that was pretty much it with the major indices. I know that the markets here are a little bit difficult to sort of like time. When is it good to time? How to time this market? You're never going to be able to time this market I can guarantee you that. But look for positive divergences, especially the RSI. I'm not seeing anything here on the daily chart that would suggest a new impulse here towards the upside. So we could continue making some new lows here. Watch this level 4,200, worst case scenario 4,100. Okay, so that's the 200-day moving average closing into wave 5. We better defend that 200-day moving average. Otherwise, it could look very ugly. Anyways, that was just a quick update here for the major indices. We looked at the dollar, the VIX, and so I'm going to keep you guys updated. You can follow me on X or Twitter. My handle is Nomad Hedge, actually across the board. If you want to follow me on Instagram as well. I'm not so active on Instagram. I'm mostly active here on Twitter. Anyway, thank you so much for watching. I'll see you guys in the next video. Take care for now.